Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Travel International Investment Hong Kong Limited Annual Report. China Travel International Investment Hong Kong Limited offers a diverse range of services to cater to the needs of travelers and tourists. At its core, the company provides travel and tourism services through various segments. The tourist attraction segment operates theme parks, scenic spots, cable car systems, skiing facilities, hot spring resorts, and other resorts in mainland China. This includes arts performance and tourism property development activities. The travel document segment offers travel document and related services in Hong Kong and mainland China. In addition to these services, the company also provides hotel accommodation and food and beverage services through its hotel operations segment in Hong Kong, Macau, and mainland China. Furthermore, the passenger transportation operations segment offers cross-border transportation services between Hong Kong, Macau, and mainland China, as well as vehicle and vessel rental and charter operations. Overall, China Travel International Investment Hong Kong Limited is a comprehensive travel and tourism service provider that caters to various aspects of travel, from tourist attractions to transportation and accommodation. China Travel International Investment Hong Kong Limited maintains a market capitalization of $6 billion, broadly in line with the industry peer group. China Travel International Investment Hong Kong Limited trades at a higher price-to-earnings ratio of 28 times and a lower price-to-book ratio of 0.56 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 26% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes, such as buybacks or dividends, rather than operational deterioration. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. While the company is able to service its interest expenses from operating income, the presence of recurring special charges raises concerns about underlying earnings quality. Investors should monitor whether these charges reflect ongoing operational inefficiencies. The primary drivers of revenue growth or decline can be identified through an analysis of the key factors that have contributed to the fluctuations in revenue over the years. Revenue growth has been driven by several factors, including a strong start in 2026 with a plus 11.1% increase in revenue from 2023-2024. The completion of major construction projects, such as the Tiger Leaping Gorge Boutique Homestay Project and Haba Snow Mountain Boutique Homestay Project, have also contributed to growth. Additionally, the domestic tourism sector is expected to continue growing continuously, with an increase in total visitor numbers and revenue from tourist attractions and related businesses by more than 20%. Government policies aimed at attracting talent, promoting innovation, and developing emerging industries have also played a significant role in driving medium-term growth. On the other hand, revenue decline has been attributed to several factors. The decrease in pre-tax profit from continuing operations and loss for the year due to discontinued operations have contributed significantly to the decline. Additionally, scenic spots such as Shapatu Scenic Spot saw a 4% year-on-year decrease in revenue, while CTS Intelligence's tourism planning services saw a 4% year-on-year decrease in revenue. The impairment of non-financial assets, including goodwill, has also been a significant driver of revenue decline, with property, plant, and equipment impairment losses of $90,579,000 recognized during the year. The net income and profit margins of the company underwent significant changes between 2024 and 2025. The net income decreased by $152 million, with a notable drop from a profit of $360,439 in 2024 to a loss of $172,222 in 2025. This decline can be attributed to several factors. Firstly, the decrease in revenue contributed to the decline in net income and profit margins. Additionally, the increase in cost of sales further eroded profitability. The fair value loss of investment properties also had a negative impact on the company's financial performance. Furthermore, administrative expenses increased, adding to the overall decline in net income. The gross profit margin decreased from 36.1% in 2024 to 29.7% in 2025, while the operating income margin dropped from 11.5% to 7.6%. The net income margin also declined significantly, from 8.9% in 2024 to -7.3% in 2025. These changes indicate a substantial deterioration in the company's financial performance over the two-year period. The company's financial performance indicates a positive trend in its operating cash flow. According to the extracted summaries, the company generated an operating cash inflow of $234,219 in 2025. This significant amount suggests that the company is able to generate sufficient cash from its core operations to meet its financial obligations. Furthermore, the net operating cash flow for 2025 was reported at $27,929. While this figure may seem relatively low compared to the operating cash inflow, it still indicates a positive operating cash flow. The fact that the company is able to generate more cash from its core operations than it needs to meet its financial obligations suggests that it has a stable and sustainable business model. In conclusion, based on the extracted summaries, it can be inferred that the company is indeed generating positive operating cash flow in 2025. This is a positive indicator of the company's financial health and stability. The company's debt level and interest expenses have undergone significant changes over the past few years. According to the extracted summaries, the total borrowings remained relatively stable at $402 million from 2023 to 2025, but the breakdown of debt levels reveals a different story. Net bank and other borrowings increased significantly from $15,000 in 2023 to $0.07 billion in 2025, indicating a substantial increase in debt. Interest expenses have also changed significantly due to changes in contractual interest rates, loan maturities, and amounts. While some specific interest expenses decreased, such as the interest expense on lease liabilities, others increased significantly, including finance costs, net which rose from a loss of $6,117,000 in 2024 to a loss of $27,794,000 in 2025. Overall, these changes suggest that the company's debt level and interest expenses have become more complex and volatile over time. The tourism industry in China has shown a mixed performance across various regions and segments. On the positive side, several areas have demonstrated strong growth and success. Ningxia's Shapatu Scenic Spot, Yunnan's Erhai Lake, Lugu Lake, and Dacheng Yading, Guangxi, Xinjiang, and Hainan's coastal resorts have all performed well. Additionally, China Travel Tour Transportation Services, Metropark Hotel Macau, and certain segments such as tourist attractions, travel documents, and passenger transportation operations have also shown positive results. On the other hand, some regions and segments have struggled to keep pace with the industry's overall growth. Operating units in Hong Kong and Macau have underperformed, while those on the China mainland have also faced challenges. Furthermore, Metropark Hotel Mongkok, Metropark Hotel Kowloon, and Metropark Hotel Hung Home lack specific performance information, suggesting potential issues within these locations. Management is optimistic about the company's outlook, citing opportunities for growth following market recovery. The company plans to capitalize on these opportunities by launching new services and expanding its presence in the scenic spot business. To drive this growth, management will focus on developing new products and projects. In terms of strategy, the company aims to create a differentiated product system that integrates culture, performance, and technology. This will be achieved through the exploration of ethnic cultural IPs and resources. Management also emphasizes the importance of responsible business practices, environmental protection, and energy efficiency in supplier selection. The company's financial position is strong, with total equity increasing to $13.27 billion at 31 December 2025. Capital expenditure of $796,976 suggests that management is investing heavily in operations and assets, which could imply a growth-oriented strategy. Management also prioritizes respecting intellectual property rights and considers the community's interests in its activities. Overall, management's outlook is positive, with a focus on driving growth through new product development and market expansion. The company's strong financial position and emphasis on responsible business practices suggest a commitment to sustainable development. The company has made several strategic moves through acquisitions and divestitures in recent years. In terms of acquisitions, the company has purchased two key assets, Jilin Songhua Lake International Resorts Development Company Limited and CTS, Beijing Snow Sports Development Co., Limited. These acquisitions are expected to enhance the company's portfolio and provide new opportunities for growth. On the other hand, the company has also undergone significant divestitures. One of the most notable moves was the spin-off of its tourism property business through a distribution in specie arrangement. This move allowed the company to separate its non-core assets from its core operations, freeing up resources for more strategic investments. Additionally, the company discontinued its tourism property business in 2025, further streamlining its operations. The company has also made moves to distribute shares of CTG Wellness to its shareholders through a distribution in specie arrangement. This move was completed on December 22, 2025, and marked an important step in the company's efforts to spin off non-core assets and focus on core business activities. The company has a history of paying dividends to its shareholders. This practice is evident in the financial reports, which indicate that dividends were paid for both the 2024 interim and 2025 final periods. The payment of dividends per share is also explicitly stated on page 6, with a value of HK cents 1. Furthermore, the final dividend for 2024 was HK cent per share, as mentioned on page 30. Additionally, the company's policy on paying dividends is confirmed on page 132, where it is clearly stated that dividends have been paid. There are subtle indications that may raise concerns about inventory buildup or supply chain disruption. A slight increase in cost of sales from 2024 to 2025 suggests a potential issue with inventory management. The numbers show a rise from $664,184 to $864,395, which could be related to inventory buildup. Furthermore, there are mentions of increases in inventory levels on page 159 and page 176, although these points are not explicitly linked to supply chain disruption. Nonetheless, they do suggest that the company may be experiencing some challenges with managing its inventory, which could have implications for its overall operations and efficiency. That concludes the financial summary for China Travel International Investment, Hong Kong Limited. Feel free to comment below, and I will be happy to answer them when possible.